Hello, very good morning to all, and welcome back again to today's Daily Dose of Market Insights. I'm Kelvin here. I hope that you guys have a great and restful weekend. Very good morning. Today will be a brand new trading week, Monday, the 28th of July 2025. And before we kickstart today's Daily Dose of Market Insights, let's very quickly take a look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump into the gist of today's Daily Dose of Market Insights, which is i.e. the intraday technical outlook of all the major cross asset classes that we cover on a daily basis, that will be the four major US dollar pair, the six major stock indices, pardon me, and as well as the two key commodities asset classes, which is gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape over the weekend and in early Asia session today, right before the start of our daily dose at 11 a.m. Singapore time. All right, so let us review some of the key important news flow that has taken shape over the weekend. So one of the important news flow is more pertaining to trade tariffs negotiations. So as we know that this coming Friday will be the deadline of the 1st of August, extended deadline by the US White House earlier, around 3 weeks ago, where this will potentially put an end to this ongoing US tariffs negotiation with her major trading partners. So especially in the last few weeks, we have some kind of a roadblock between US negotiation with major trading partners like Japan and especially EU, where earlier on Trump threatened to slap EU with a rather high tariff rate of 30% on mostly all EU products heading into US. So over the weekend over here, what we could see is that EU has managed to do some breakthrough, I would say. So there is there is actually more or less a confirmation deal that EU with US has reached a tariff deal to avert painful trade blow. So based on reports from Bloomberg, it stated that US and European Union has agreed on a hard-fought deal that will see the bloc, which is European Union products, facing 50% tariff on most of its export, including key products, which is automobiles. So we know that automobiles is one of the key exports of Eurozone. So that actually potentially created a positive feedback loop into the risk asset classes, primarily the stock indices. So while we are speaking right now, both the S&P and the E-mini futures are actually staging further advancement, extending their gains from last Friday. So the E-mini S&P is up by 0.42% as we are speaking over here. One second, let me flash the screen. Yeah. Okay, so they are rallying pretty much sharply, and the E-mini Nasdaq 100 futures also inch up by 0.56% intraday as we are speaking now, basking in the limelight of trade deal optimism due to this EU-US trade deal that cemented a lower tariff rate of 15% on EU products heading into US, and most importantly, that primarily covers European Union key export products, which include automobiles. All right, and also one of this news flow that is taking shape in Asia, not Asia, over the weekend, was there is actually a local Japanese media report over here stating that there is signatures that's being collected by the current ruling coalition party, which is the Liberal Democrat Party over here. So primarily speaking over here is that there is this member of this LDP party that is actually circulating signatures within this LDP party itself to actually potentially remove the current prime minister, which is Ishiba. So this is being reported on the 25th of July, which is over the late last Friday over here by a local Japanese media report. So due to this political uncertainty surrounding the fate of the current incumbent Prime Minister Ishiba, due to this potential internal party revolt to actually threaten to remove him, where earlier on he is determined to stay in the office after the LDP suffered a major defeat in the previous weekend on the upper house, okay, on the Japanese upper house parliament. So with this negative news flow coming out from Japan itself, so that actually causes the Nikkei 225 to actually plummet right now during the Asia session as we are speaking, down by negative 0.74%. So the Nikkei 225 is the current outlier at this juncture. So still recall that for those who followed my daily dose on last Friday, I do mention that in the very short term, the Nikkei 225 is potentially doing this minor corrective pullback. And indeed, this minor corrective pullback is taking form right now. And later I'll share with you guys what are the key levels to watch, the refresh key levels to watch on the Nikkei 225, and as well as the trend bias for today. Due to the fact that the Nikkei 225 is down, is a underperformer in today's Asia session among the major Asia Pacific benchmark stock indices, where it's down by intraday negative 0.74% due to a very country-specific news flow that is pertaining to the political uncertainty or surrounding the fate of the current incumbent Prime Minister Ishiba due to the potential internal revolt among his party, which is the LDP party. So Japan Nikkei 225 is not able to actually bask in the limelight of this broad-based risk-on scenario that we are taking shape right now in the global markets due to this EU-US trade deal. And also, if we go down to the rest of the other Asia Pacific benchmark stock indices, the Hang Seng Index is actually up by 0.73% as well, which is also basking in the limelight of this EU-US trade deal, US trade deal that is more or less cemented with a lower tariff rates for EU products heading into US. From an earlier rate of 30% drop down to 15%, and also due to pertaining to much more country-specific related news flow, is that this week we will have this I think the second round of a trade negotiation between US and Chinese officials that going to be held in Sweden, Stockholm, starting from today. All right. So ahead of this trade negotiation talk that's going to be held by starting from Monday in Stockholm over here, is that there is a news flow related by from SCMP, South China Morning Post, stating that both US and China is expected to extend this tariff pause at this Sweden talks starting today between these two by another 90 days, so by another 3 more months. So technically speaking, based on the last round of trade tariff pause talks that is being held between US and China, that is held in London earlier on, and Geneva, they agreed to extend their trade tariff truce to 12th of August, and we know that 12th of August is coming pretty soon. And based on this positive news flow stating that these two countries are still in a negotiation mode, so there is lower risk of a kind of a trade war erupting for another 90 days. All right, so that would actually kind of created a positive feedback loop into the Hang Seng Index as well, which is up by 0.76% as we are speaking right now. And even the mainland China A-shares benchmark index, which is the CSI 300, is also up by 0.3%. And across to other Asia Pacific benchmark stock indices, we see a bit of mixed bag over here. The the Korea Kospi index is down by negative 0.3%, whereas the Thai X benchmark stock index, which is the benchmark stock index for the Taiwan stock market, is up by 0.4%. Our local STI, after about 15 consecutive or 14 consecutive days of fresh all-time high, finally has started to see some kind of price action consolidation. So the STI is down by negative 0.2%, and the ASX 200, which is the Australia benchmark stock index, is up by 0.3%. So it's kind of a more of a mixed bag performance in the Asia Pacific benchmark stock indices, but there seems to be much more of a positive tone than a bearish tone as we are speaking right now. And over to the FX market, something also very interesting that takes shape over here. So based on the overall the FX market, we see dollar rebounding on last Friday. So still recall that on last Friday, we do have a bearish bias on the euro dollar for that potential minor corrective setback. So that minor corrective setback took shape in the US session on last Friday over here before inching downwards, before the dollar inching downwards. So this is the dollar 5-day rolling performance of the US dollar against other major currency as of now. We are speaking this Monday. So at the start of today's Asia session, we start even, yeah, not even at the start, somewhere around the end of last Friday US session, we start to see the dollar strength that has taken shape on early Asia session on Friday has starts to dwindle downwards, all right, over here, all right. So there's actually a kind of a slight dollar, we call it slight, that is being seen on the later part of last Friday US session, and this slight exacerbated after after the positive news flow coming out from US and EU sealing off that trade deal that allows EU products to hit into US by a lower tariff rate of 15%. So if you look at the 1-day rolling performance, it's much more clear. So the 1-day rolling performance is based on the past 24 hours. So based on the past 24 hours, what we could see over here is that this rally here on early Monday, okay, at 7 a.m. Singapore time. Okay, you see the dollar plummeting downwards. Then thereafter at 9:05 Singapore time AM, there's a spike up in this dollar. Then after that, the dollar starts to trade downwards again. All right. So what's interesting over here is that even the dollar yen earlier spike up. Okay, there was a strong spike up between 9 a.m. Singapore time all the way up to 10 a.m. Singapore time due to that politically uncertainty surrounding the fate of current incumbent Prime Minister Ishiba, that causes the yen to weaken and the dollar to spike, but that also see the dollar yen dwindling downwards as well. So what we could see over here is that as we are speaking right now, there is some signs of dollar weakness taking into shape in the FX market. So indicating that the dollar weakness could potentially come back into the market ahead of this week very important key heavy macroeconomic data, where we have the release of November payroll, which is at the end of this Friday, and also we ahead of that on the 31st of July we have the all important FOMC meeting as well. Right, so later I'll touch on more on this particular economic calendar event, and I'll share with you more important of their highlights as we approach them in the closer date in our daily dose that we cover on a daily basis, on a frequent basis over here. So with that potentially sum up today's daily dose of market insights, which I've covered the first segment of the daily dose of market insights, where I've covered more on the news flow and their relevant news flow and their impact on all this intraday movement of these broad-based cross asset classes. So with that, now let me now touch on the second segment of today's daily dose, which is the intraday technical outlook, starting with the FX market. Right, so let me expand my screen. Right, over here. So let's start with the FX market first. Okay, starting with the euro dollar. So still recall euro dollar on last Friday, we actually have a bearish bias below 117.79 for this potential minor corrective pullback to head down towards the 20-day moving average 117.10, maximum 116.80/116.66, which is the confluencing with the lower boundary of this medium-term ascending channel that is still in place since the low of 13th of May 2025. And price action has indeed hit our first the support level at 17.10, which is at the 9 a.m. Singapore 9 p.m. Singapore time on last Friday. Then thereafter, before shaping a bounce throughout the US session on last Friday. And given the fact that the hourly RSI has also staged a bullish breakout from this parallel ascending, former parallel descending trend line resistance that previously has this bearish divergence that has taken shape on last Thursday. So given this positive observation, back in the euro dollar. So potentially we may now start to see the start of another impulsive up move sequence that could be taking shape right now as we are speaking. So with that, my first support level to watch will be at 117.10 for now. Pivotal support zone will be at 116.80, 116.60, 1.1680, 1.11660, which confluence with the lower limit of this medium-term ascending channel. Unless we have an hourly close during the open session and a breakout above 117.90, then I would tighten my short-term pivotal support level to 117.10. So above 117.90 exposes the next intermediate resistance zone at 118.25/118.45, a Fibo extension level of 0.3825, and as from 0.3825 was all the way from the start of this medium term bullish uptrend phase that is in place since the low of 12th of May this year. All right, there's a 0.38 Fibo extension, and also the minor swing high of 1st of July. Above 1845 exposes 1.1910 next over here. And however, if price action suddenly or eruptively starts to break down below 116.60, today's intraday bullish bias will be invalidated to kickstart another round of minor corrective decline extension, heading down towards a 116.15, followed by 115.60, which is a key medium-term pivotal support level that confluence with the rising 50-day moving average. So i.e., for today, I'll be flipping back to a bullish bias on the euro dollar. So for now, for two key support level to watch, 116.10, which is the 20-day moving average, where it managed to shape a minor V-shaped recovery. Pivotal support zone will be at 116.80/116.60, unless we have an hourly close and a breakout above 117.90 during the start of the European session later. Then I would tighten my short-term pivotal support to 117.10 on the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar, we have a neutral stance on last Friday due to mixed element, and last Friday it plummeted downwards, all right, over here, and right now it's appearing starts to stall at this minor ascending trend line that I drew from the low of 16th of July. Okay, coming very close to it at 134 figure level, and below it is this minor swing low of 16th of July and 17th July that kickstart that previous minor rebound phase earlier on, but unfortunately it can't have a clear breakout above the 20-day moving average and starts to thunder downwards. All right, over here, and right now where it's stored is also stored close to the 76.4 Fibo retracement of that previous minor recovery from the low of 16th of July all the way up to the intraday high of 24th of of 24th of July last Thursday. So it's coming, it managed to start close at the 76.4 Fibo retracement as well. And also the hourly RSI has managed to exit from a rather extreme oversold condition on last Friday. So with that, I'll be using 1.3375 as my pivotal support level. First support level to watch will be 134 figure, which is the minor ascending trend line that I drew from the low of 16th of July. So 133.75. So it's actually a zone 134, 133.75. So 133.75 pivotal short-term pivotal support. I will flip back to a intraday bullish bias, at least for a minor bounce scenario to take shape for today in the European session and heading into the US session. A breakout above 134.70 exposes 135.30 next, which confluence with the 50-day and the 50-day and the 20-day moving average intersection point at this juncture. However, if price action starts to stage a bearish breakdown below 133.75, then today's intraday bullish bias scenario will be invalidated to see the extension of this minor corrective decline sequence extending further towards the downside, exposing 133.30 followed by 132.50 next. So 133.30 is the congestion area of 16th of May, and 132.50 is the minor swing low of 15th of May and 16th of May for now. So watching very closely 134 figure slash 133.75, which is my short-term pivotal resist support level, flip to a intraday bullish bias due to the extreme oversold condition that's being seen on the hourly RSI, where it managed to just exit out from it in today's Asia session. First resistance level to watch 134.70, a breakout above it, potentially seek out 133.30 in first step, which is the potentially the intersection point between the 20-day moving average and the 50-day moving average at this juncture. So that's for the sterling dollar. Onwards, next will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar on Friday managed to stage that rebound off from the 20-day moving average as well, and as well as this minor ascending channel lower limit that I drew from the minor swing low of 17th of July over here. So with that, I will have a bullish bias for today, using 165.40 / 165.30 as my short-term pivotal support zone over here, which is this former minor swing high of 17th of July all the way to 22nd of July that managed to stage a bullish breakout, now turns into a pullback support level. And if you do the Fibo retracement of this entire prior minor rally phase from the low of 17th of July all the way up to last Thursday, 24th of July, that also confluence with the 50% Fibo retracement. So as long as 0.6540, 0.6530 short-term pivotal support zone holds, we will have an intraday bullish bias for a recovery on the Aussie dollar, a breakout above this first intermediate resistance level at 65.80 that was tested in early today's Asia session, potentially revisit the minor swing high area of 24th of July at 66.30 / 66.45 next, which is a Fibo extension level at 1.618 taken from the low of 17th of July, and also close to the upper boundary of this minor ascending channel that is still in place since the low of 17th of July as well. However, if price action starts to do a bearish breakdown below 65.30, today's intraday bullish bias will be invalidated to see a choppy minor corrective decline sequence unfolding, exposing 65 figure next, which confluence with the rising 50-day moving average. So that's for the Aussie dollar. Next up will be the dollar yen over here. So the dollar yen, we do have a neutrality stance on last Friday. So in today's Asia session, it tested the upper neutrality stance at 147.90 due to that political uncertainty surrounding the fate of Prime Minister Ishiba over here. But upon testing the 147.90 upper limit level, we start to see a bearish divergence that has taken shape on the hourly RSI. It starts to shape a lower high after hitting the overbought level on last Friday. All right, over here. So same high, but lower high on the RSI, so indicating the lack of upside momentum. So given this rather lack of upside momentum, we will have a neutrality stance again on the dollar yen for today, but our neutrality stance will have a tighter range. So neutral between 147.90 and the rising 20-day moving average that is acting as intermediate support at 146.50. So neutral between 147.90 and 146.50 for now on the dollar yen. Right, so that sum up the intraday technical outlook on these four major US dollar pair. So let us now turn our attention to the major stock indices, starting with the Hong Kong 33 that is representing the Hang Seng Index. So on Hong Kong 33, still recall that on last Friday we flipped to a intraday bearish bias for the first support to come in at 25,260, followed by 24,940, 24,850. So price actually already hit the first support level and form a minor V-shaped recovery during the start of the US session on last Friday. Right. So with that, given this positive price action that has taken shape so far on the on the Hong Kong 33, I'll be using the 25,260 as my short-term pivotal support on the Hong Kong 33. We'll flip back to a intraday bullish bias. First resistance level to watch will be 25,750. A breakout above it exposes 26,030 / 26,220, which is the upper limit of this ongoing minor ascending channel that I drew from the low of 10th of July, and as well as the 1.618 Fibo extension taken from the low of 2nd of June. Alright. However, if price action starts to do a bearish U-turn and the hourly breakdown below 25,260, today's intraday bullish buyer stance will be invalidated to see the continuation of the minor corrective decline phase extended downwards towards the downside, exposing the next near-term support level at 24,950/24,850, which was this former medium-term swing high of 19th of March now turns into a key pullback support area. Only a breakdown below 24,850 will see a extended corrective decline sequence playing out, exposing the next near-term support level to watch will be at 24,400, which confluence with the rising 20-day moving average. So that's for the Hong Kong 33. Next up will be the Japan 225, representing the Nikkei 225 over here. So the Japan 225 continues to actually plummet downwards over here, hitting our first support zone that we highlighted on last Friday, which is we flipped to a bearish bias on last Friday at 41,050/40,850. So if you do the Fibo retracement of this rather steep up move that has taken shape from the low of 22nd of April all the way up to last Thursday, these 2 days of steep rally. So far price action has already retraced close to 38.2% Fibo retracement of this level over here. But however, the hourly RSI hasn't hit the oversold region yet. All right, the hourly RSI have hit the oversold region yet, so indicating there could be still some more room for further potential downside to extend this ongoing minor corrective decline a pullback or sequence much further downwards over here. So using a tightened short-term pivotal resistance for today, which is today's gap up. So after the gap up, can't maintain its upside momentum and thundered downwards due to that internal negative political factor that's taking shape in Japan right now, which I covered in much detail in the first half of today's daily dose of market insight. I will maintain that bearish bias for the potential extension of this ongoing minor corrective decline sequence using a tightened and adjusted short-term pivotal resistance for today, which is today's intraday high at 41,650. 41,650 tightened and adjusted short-term pivotal resistance level. Maintain this bearish bias for this ongoing minor corrective decline sequence to extend further towards the downside below 40,850 exposes 40,470 next, which is the 61.8 Fibo extension, Fibo retracement of this prior steep rally from 22nd of July to 24th of July intraday high. And below this potentially will be my short-term pivotal support level at 40,130, which is the rising 20-day moving average, and as well as this former minor range resistance from 4th of July, where it broke out and staged that steep rally in the last two previous up move that's been seen on Wednesday to last Thursday over here. So once price actions hit close to the 40 hit at the 40,460 level, 40,470 level, I'll be looking out for signs of a bullish elements taking place, like bullish reversal candlestick, because price action is coming very close to the 40,130 short-term pivotal support level, which confronts with the rising 20-day moving average. Because overall, at this juncture, this ongoing slide that is taking shape from last Thursday minor swing high of 41,975 is still constituted as a minor corrective decline sequence within its medium-term uptrend phase that is still intact after that clear bullish breakout from the former range resistance that was previously in place since May 2025, clearly taken out previously about 4 weeks ago, and also price action still trading above the 20 and the 50-day moving average. However, if price action didn't slide down as intended to complete this minor corrective decline sequence and starts to reverse upwards and have a bullish breakout of an hourly close above 41,650, then then this move will invalidate today's intraday bearish bias view to resume the impulsive bullish up move sequence, retesting 41,975 before heading up to give a push up towards the current all-time high area that was printed in July last year at 42,513 next. Okay, so that's for the Japan 225. Next up will be the Germany 30, representing the German DAX. So the Germany 30 CFD index have a gap up in today's Asia session and almost hitting our first resistance level at 24,560, where on last Friday we do have a intraday bullish bias using the pivotal support level of 23,140, which correspond to the rising 20-day moving average as well. So given the fact that it hasn't broke out above the 24,560 level, I would be still using 23,140 as my short-term pivotal support level, unless we have a bullish breakout above 24,560 later during the European session open and hourly close above it. Then I will tighten my short-term pivotal support to 24,320 next, which is the gap up support that's being printed out in today's Asia session. So still maintaining our intraday bullish bias on the Germany 30. Next resistance level to watch will be 24,720, followed by 24,930, which is a 0.618 Fibo extension taken from the low of 19th of July, as it continues to evolve within this minor ascending channel from the low of 19th of June 2025. All right, low. However, a price action did a bearish U-turn and hourly close below 23,140. Today's intraday bullish bias will be invalidated to see a retest on the minor swing low of 16th of July and 22nd of July, which confluence with the 50-day moving average at 23,930. A breakdown below it would starts to see a kind of a medium-term or multi-week corrective decline sequence unfolding, because there's a price action breaking below the 50-day moving average, exposing the next support level in first step at 23,640, which is the minor swing low of 1st of July and 2nd of July over here. So that's for the German 30, maintaining our intraday bullish bias. For now, using 23,140 as my short-term pivotal support. If we start to see a breakout above 24,560, then we would adjust this short-term pivotal support to 24,320 next. Next up will be the major US stock indices, starting with the US Wall Street 30. Representing the Dow Jones Industrial Average. Should the US Wall Street 30 also gap up and now testing the current all-time high that was printed in late December last year at 45,100 based on the CFD index movement, which in our platform we call the US Wall Street 30. So first support level to watch will be at 44,920. So unless we have an hourly close in the European session thereafter at 45,100, I will tighten my short-term pivotal support to 44,920. So for now, we are still using last Friday intraday low, where we start to see this bullish hammer that's being formed at the start of the US session, and so confluence with the rising 20-day moving average very closely, and as well as the former pullback support level, the pullback support level of this former minor descending trend line from the high of 7th of July, all confluencing around at 44,620. So still using 44,620 short-term pivotal support level, maintain our intraday bullish bias stance on the US Wall Street 30 above 45,100, exposes 45,455 slash 45,520 on the intraday basis, which is defined by a Fibo extension cluster level. Only a sudden bearish U-turn and an hourly close below 44,620 that would invalidate today's intraday bullish bias to see a minor corrective decline unfolding, exposing the next near-term support level at 44,150 next. A breakdown below it sees a further extension towards 43,800 slash 43,600, which is the minor swing low area of 17th of June, and as well as the minor swing low of 27th of June. Right, so that's for the US Wall Street 30. Next up will be the S&P 500. So S&P 500 also rally up and almost hit our resistance level at 6430 slash 6450 that we highlighted on last Friday. So this gap up here in today's Asia session and the psychological level as well, 6,400 will be my short-term, my first support level to watch. Adjusted pivotal support level for today will be on last Friday minus swing low at 6370, all right, over here. So given that it hasn't broken out above 6450 on the upside, unless you have an hourly close above it thereafter during the European session, then I would tighten my short-term pivotal support for the S&P 500 to the 6,400, which is the gap up that is formed in at the start of this Asia session. So for now, still using this slightly upward adjusted pivotal support at 63.70, maintaining our intraday bullish bias. Next resistance level to watch after 6,450 will be 6,470, 6,490. However, if we start to see a bearish U-turn and the hourly close below 6,370, then we will see another round of minor corrective decline sequence exposing 6,340 slash 6,330. A breakdown below it, seek out the 6,000 key important level at 6,290, which confluence with the rising 20-day moving average as well. So that's for the US S&P 500. Next up will be the Nasdaq 100. So the Nasdaq 100 also gap up in today's Asia session and hit our first resistance zone at 23,400, 23,480. So as long it hasn't shown a breakout above 6,388. So if we start to see an hourly close above 23,480, then I would tighten my short-term pivotal support to 23,320, which is the gap up that's being formed at the start of today's Asia session. So for now, I'll be using a slightly adjusted upward pivotal support level, which is taking into account of last Friday intraday low and last Thursday intraday low at 23,190. So as long as this adjusted slightly upwards pivotal support at 23,190 holds, I will still maintain an intraday bullish bias on the Nasdaq 100. Next resistance level to watch 23,710, which is a Fibo extension cluster level, one time taken from the low of 19th of June, and as well as the upper limit of this ongoing medium-term ascending channel from the low of May 2025 low. However, if price action starts to do a bearish breakdown below 23,190 and the hourly close below it, today's intraday bullish bias will be invalidated to kickstart a minor corrective decline sequence, exposing the next near-term support area at 23,020 slash 22,840, which confluence with the rising 20-day moving average as well. Right, so that sum up the intraday technical outlook on all the 6 major stock indices. All right, so now let us now proceed with the commodities asset classes, starting with the gold XAU slash USD. So for gold XAU slash USD, we flipped to a neutrality stance on last Friday due to a rather mixed element. So what we could see over here is that price action broke play around with our lower neutrality limit at 3,330. And what's interesting over here is that as price action shaped a lower low over here, this low, this low, lower than this low, there's a lower low over here. So during this lower low, let me put a trend line here. Okay, the RSI didn't shape a lower low and form a similar low right at the oversold region. And as we are speaking right now, there is also a bullish breakout that's taking shape. Okay, there is a bullish breakout. All right, so indicating that the downside momentum that is being seen on last Friday has kind of wind off over here, and price action starts to stall at this medium-term ascending trend line from the low of 15th of May 2025 low over here. So given this positive element that's being seen on the hourly RSI, which I explained to you guys earlier, I'll be using 3,324, which is today's Asia session minus swing low, and as well as the medium-term ascending trend line support as well that is still in place since the low of 15th of May, which is this level here, all the way down. All right, this level, 15th of May. Okay, I will flip to a intraday bullish bias for a minor recoveries scenario for the gold XAU slash USD. First resistance level to watch will be 3,348, which also confluence with the 20-day moving average, acting as an intermediate resistance, and as well as this medium-term ascending trend line from the low of 31st of December 2025. So if we could have a breakout and the hourly close above 3,348, that means that's indicating that the slide that is being seen on last Friday to hit the 3,324 low, this area, this slide over here is constitute as a bear trap over here, where the bears got trapped for a failure bearish breakdown of the 50-day moving average. And given this bear trap over here, potentially there could be seeing some intraday stop losses being taken out for bearish positioning above 3,348. Potentially could seek out the next intermediate resistance at 3,375, which is the minor swing high of 24th of July before this last leg of minor slide took shape. on late last week. However, a price action, instead of shaping that so-called minor recovery scenario, and did a bearish U-turn and a breakdown below this 3,324 short-term pivotal support level that we have, it will start to shape a further slide towards 3,312, the minor swing low of area of 17th of July and 10th of July, before exposing 3,300, which is our medium-term pivotal support level over here. So that's for gold XAU/USD, watching very closely 3,324 as my short-term pivotal support. Flip to a intraday bullish bias for today for a minor recovery scenario, given the positive element that I shared on the hourly RSI. First resistance level to watch is something like an upside trigger level of 3,348. Above this 3,348 will indicate a bear trap that has taken shape on last Friday, seeking out the next intermediate resistance level at 3,375. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil continues to drift downwards below the 50-day moving average and the 20-day moving average as it seek out to retest the all-important current minor range configuration lower limit that is acting as a support at 65.20. So since hitting a low of 25th of June, it has been in a rather choppy movement that is trading within this minor sideways range with the key range support at 65.20. So right now is really trading below the 20-day and the 50-day moving average. So on last Friday, we used 67.40 as my short-term pivotal resistance level, where it got tested a couple of times before shaping that bearish breakdown on last Friday US session. At the start of the last Friday US session, breaking below the 50-day moving average, and even in today's Asia session, it can't have a proper it can't break up above it. It can't reintegrate above the 50-day moving average. So first resistance level to watch, pardon me, for today will be at 66.50, which is the 50-day moving average, acting as the intermediate resistance. Pivotal support level in short term will be still at 67.40, which is the 20-day moving average that got rejected on the start of the US session on last Friday before plunging downwards. So first support level to maintain my first support level for today's bearish bias will be the key range support level at 65.20. Over here, a key sideways range configuration that is in place since 25th of June low. A breakdown below 65.20 will potentially seek out a bearish breakdown scenario for West Texas crude oil over here, exposing the next near-term support level at 62.75. 62.75, which is the minor swing low area of 3rd of June and 5th of June over here. All right, and also a Fibo extension level on the downside as well, taken from this failure bullish breakout above that 200-day moving average before it's 200 downwards. So that's also constitute close to 1.382 Fibo extension. Right. However, a price action breakout above 67.40, which is the short-term pivotal resistance for today, will negate today's bearish bias to see it floating upwards towards the upper limit of this sideways range configuration and the 200-day moving average acting as the next resistance level at 68.50/69.15. So that sum up the intraday technical outlook of West Texas Oil, and as well as all the key cross asset classes that we cover on a daily basis. So before we go, let's have a quick look at today's economic calendar. What are the key data to look out for today? So today's economic calendar will be rather quiet before the hit takes shape on 31st of July, which is the FOMC meeting, and we have a slew of mega cap technology stock reporting as well, which is Apple, Amazon, Microsoft, and Meta. So I'll cover that more in greater detail as we approaches these dates. So for today's price action data on the today's economic calendar will be rather quiet. So no key economic data that to take note of for Monday, 28th of July. And during the start of the Asia session on Tuesday as well, also will be a rather quiet day. Give me a minute now just to confirm everything. Yes, so today's economic data will be rather light, so the key action will come on Wednesday, 31st of July. So I'll touch more about that as we progresses across the week. Okay, so that's sum up today's daily dose of market insights for today. Kelvin here signing off, and I wish you a great day ahead, and we shall speak again tomorrow. Thank you very much.